Welcome back to Fast Market out here on the Schwab Network. Time for cash tags. For that, let's bring in our next guest. It's going to be Andy Swan, co-founder at Likefolio. Welcome back to the show, Andy.
Thank you. Happy Monday.
Happy Monday to you. Happy Monday to Carvana investors this year, up 183% so far this year. Positive analyst note out of Evercore today. They've got a price target of 157, up from 142, and the stock is currently trading over 150. But, I mean, do you guys have the data to back this up? Because it seems like the ship has turned on this stock, and they're making more money on every used car they sell. They've got better margins. They're taking some market share. Do you have the data that supports a move?
Yeah, we do. You know, this is a company that I've just put in the category of I will never bet against this company again. I've gotten burned once or twice based on valuation or something like that. But when you look at Carvana's gross profit per unit, it's one of the most impressive charts you're going to see. Probably should be front and center of every business book in the country. This is a company that has expanded from making $300-400 per car that they sell 10 years ago to over $7,000 per car that they sell today. And that's, $7,000, that's up from $3,000 or $5,000 just 2 years ago. So they're continuing to expand on this operational excellence. And it's just a little bit of a sight to behold. The other thing I'll say, they're doing a great job on a per unit basis, but they're also expanding the number of units at the same time. And if we look at the web traffic, the digital traffic to Carvana, it's now overtaken CarMax, up significantly year over year. They're running up against some tough comps now because they were starting to do pretty well last year. But all in all, this is a company that continues to execute at an extremely high level. I think one of the most interesting things that the management said on the last call is, we shipped 100,000 cars in Q2. We're the number 2 used car dealer in America or in the world, and we only have 1% of the used car market. So there's incredible upside in terms of capturing market share and bringing in a very fragmented industry under one roof. And if it's going to be anybody, it looks like, according to what we're seeing, Carvana is the one that could execute on that vision and get to 8%, 10% of a very fragmented market.
Andy, greatest comeback since Lazarus in Carvana. This company went from a volatile period for used cars into what you said. I have the exact number, $7,049 in Q2, whereas their gross profit per vehicle. And as you know, Andy, used cars are a very local market. Well, they can be national. And youth, as they start buying cars, number one, they don't want to buy new cars. They don't really like it. And they hate the dealer experience. They do everything online. They don't go to grocery stores. They don't go anywhere. They want to click online and buy something. And that's why this model has legs going forward. As long as they take care of the debt, which currently sits at $4.8 billion, and keep cutting expenses, this stock gets healthier by the day.
Yeah, and this is a company also that, if you think about all the companies that could benefit from rate cuts, this is one that, it would be at top of the list. I think, consumers are paying 10% more per car in terms of car payments right now, when the car price is only 3% higher. That's the impact of rate increases. Is it really hurts the consumer. It hurts Carvana, CarMax, all of those. Plus, with Carvana's debt, I think that they could benefit from falling rates really quickly. So this is a company that is, like you said, greatest comeback since Lazarus, maybe, or greatest comeback since Domino's Pizza. I would say we'll put those three in the same boat together, because this is a company that has leaned on technology in all the right ways to get its profitability through the roof, something that a lot of investors, including myself, didn't think was possible just a few years ago.
Yeah, I mean, this stock traded $3.55 at the end of 2022 with the expectations that they were going to be insolvent, that they were going to go bankrupt, because they had such big debt on their balance sheet. They've reworked a lot of that, and that's also helped. But Andy, they don't have earnings until Halloween. It might be a scary earnings event come Halloween if they don't hit some of these numbers and these growth targets. But, as far as your data goes in the rally that we've seen, do you guys have like a score right now on this one?
Yeah, I think we could see a pullback. I think it's run pretty well. I'm not going to bet on Carvana to go lower. Like I said, I've done that a couple times in my life and both times gotten burned. So I'm waiting. I would love to see them deliver really nice numbers that don't quite live up to Wall Street expectations sometime in the next couple of quarters, give us a pullback and be able to get some shares for the long term. Because again, I think this is a really, really well-run company that currently sits at 1% of the total market share and could capture a whole lot of that over the course of a generation. So I think of this as a long-term play. In the short term, if anything, I would expect a pullback from here, but we're not going to play it in that direction.
All right, great stuff. Great, data as always, Andy. Appreciate it.